What's up, this is Mandelo, and in this video I'm going to continue the Trading the Open series by looking at one of my favorite setups to trade, the 80% setup. In the past few videos we've seen many reasons to look at the open and price action early in a session, and saw several examples in which value areas were mentioned and played a role in our setups. Off the open, session value areas haven't been established and open auction occurs, so the important previous day levels can carry over into the new trading day. We can use some of these levels to identify high probability setups, and one of the easiest to trade is the 80% setup. Once identifying the price at daily open, reference this level in relation to previous day value area, which is where 68% of previous day volume transacted. Value areas can be identified many ways, but most traders prioritize volume profiles for value areas over time-based value areas, especially when applying daily open strategies. So, to identify the 80% setup, you need to observe the daily open and session volume profile, or market profile with TPO and volume. Other tools which report daily levels like XO can also be used. And for the setup, the most important levels are daily open, previous day value area high, and previous day value area low. But previous day point of control and previous day equilibrium can be helpful for several setups as well. Once you identify value area, we can look to see if the 80% setup is valid at the open. For the setup, if the market opens above or below previous day value area and accepts back inside value area for 2 consecutive 30-minute candles, there's a high probability it will fill the complete value area. Sometimes called a full rotation or value area rotation, the probability varies between different markets. Regardless, it's a high probability setup. When charting to look for setups, extension of previous day value area optimizes visualization of price interactions at previous day levels. Some indicators can do this automatically, or you can draw the box yourself. A bullish or bearish retest around the reclaimed value area margins after previous day equilibrium or previous day point of control is tested is common and can offer entries for those who missed the initial reclaim of value area. Stops can be placed outside of value area or daily open, which is sometimes retested before reclaiming the range. The highest probability 80% setup presents when price opens outside previous day value area and returns back within previous day value area within the first hour of trading. This indicates the market's not confident about the direction outside of range, and soon we can expect the auction to fill the complete previous day value area. An aggressive way to trade the 80% setup is using the 2-bracket rule. When price opens outside value area, then price touches value area with a 30-minute candle, and price trades within previous day value area for the second 30-minute bar. This meets the 80% criteria. More conservative is this setup but waiting for the first bar to close. When the second bar opens, we have met the criteria by having 2 30-minute candles within value area. Still more conservative is this setup but waiting for the second bar to close in previous day value area. We suggest more confidently price is accepting back within range. Responsible profit targets for the setup can be trimming at previous day point of control and previous day equilibrium. And remember, the setup is complete when price reaches the opposite side of value area. So leaving some to run is fine, but a rotation doesn't mean continuation will occur. Responsive activity is often seen in quick spikes and stop runs outside value area, where market reaches a certain level of liquidity and returns back to fair value, especially with strong volume. Identifying higher time frame market direction with high time frame profiles and market structure can improve probability of a setup playing out, or at least success in taking the trade. And it can help to identify a price might reject during a retest. Don't get so focused on intraday setups that you lose sight of the big picture and high time frame levels. A ranging market can make reversion trades an easier setup. And in a trending market, we may look for higher time frame ranges or previous levels and points of control to form support resistance levels. More on this in a later video, but a simple way to identify a ranging or non-trending market is point of control is relatively sideways over multiple sessions. In a trending market, POC will either increase over several sessions or decline over several sessions. It's important to note that when daily open is above previous day value area, this can be a bullish sign, suggesting potential for further upward movement. And when daily open is below previous day value area, this can be bearish, indicating potential continuation downward. Just because price opens outside previous day value area doesn't mean a full rotation will occur. If it opens outside and doesn't return or retest the margins of value area, it can be a sign of a continued directional move. If price does break out from or return to a range, that doesn't mean just to buy or sell the breakout. Price can easily lose or reclaim, but time spent back inside or outside, strong, high volume moves, and reaction at high time frame levels can provide guidance identifying market direction. There are several iterations of the setup using volume or TPO value areas, but if the setup presents with both, this is more confluence to take the trade. A rotation can technically be applicable if market opens inside value area and moves outside previous day value area during the initial balance, but reverts back to previous day value area for 2 consecutive 30-minute bars. This is considered to be a failed auction outside previous day value area and can be traded like an 80% setup, though it has lower probability than a true 80% setup. Some alternative versions using principles of the 80% setup can be quite effective, though maybe not have as high a probability as the traditional setup, and you may be more likely to get chopped up before the trade plays out. The 80% setup is great, but I wouldn't count on anything having an 80% success rate without backtesting it significantly. But anything better than 50% probability can be profitable with appropriate risk management. So this strategy is best applied as confluence with your own trading ideas. And don't forget, previous day levels reset at daily open. Though they aren't 80% setups, high time frame value rotations can also occur, and high time frame levels hold more significance than daily levels due to greater amount of time or volume transacted contributing to the profile than in low time frames. In this example, weekly profiles, we can have rotations occur. Monthly profiles and levels can hold even more significance than weekly profiles. We can look at entire ranges with visible range volume profiles. And we can pull fixed range volume profiles from points of interest in market structure. Thanks for watching. Please like and subscribe and share if you think it's helpful. Good luck, and see you in the next one.